All right, y'all, back to work, and what a reversal off that blow-off bottom we talked about last Friday. Now buyers are way back in control of momentum. The challenge, though, is now we're way high up after this big move higher we saw this afternoon, and at this point, I would assume everyone's trying to buy a pullback tomorrow morning. Now pullbacks, back up for a second. They sound so easy, but we all know this. If you have any experience in trading, picking that perfect pullback, it's not as easy as it sounds. So tonight, in the video tonight, I want to talk about two entry techniques I use to pick that perfect pullback, time that perfect entry after a big move up that we saw this afternoon. So charts are ready. It's a very easy strategy. I'm going to cover the entire roadmap in tonight's video. So enough of the intro. Let's dive in and make some more money. It should be a pretty easy Tuesday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I have 3 clues on these charts telling me where I think the money is made on Tuesday morning. The first of 3 clues is right here on these hourly time frames. Both the S&P and the Nasdaq are very, very similar. We had a big bull run up in the month of July into what is basically a trading range. We then saw that rug pull, that blow off bottom that we talked about to finish off the week last week. If you ask President Trump, he would say part of that was that rigged jobs data, but we'll talk about that a bit later on in this video. Now, what do ranges like to do? They love to break out and pull back, but we're not a bear market right now. We're an overall bull market. One big clue right now, and again, this is both in the S&P and the Nasdaq, is we have a bullish range with a very strong breakout. The sellers are going to try to hold that breakout pullback, basically hold back these buyers from snapping right back up into that range up overhead. That's one of 3 big clues for tomorrow. And again, very similar to the Nasdaq as well. Let's check scheduled for tomorrow. There's not a lot of news this week, but I do have one thing on my mind tomorrow. That is that ISM services number at 10 o'clock Eastern time. We know the jobs market is a very big part of the Fed's decision to potentially cut rates this year. That ISM services number will definitely be something I'm watching tomorrow. And boy, there really aren't a lot of major news events the rest of the week this week. So 10 o'clock Eastern time, keep it in mind for tomorrow. Let's get back to our charts though, because we know when the news is, but the money is made on the charts. Let's now drill down to some tick charts right now, because I mentioned earlier, there are 3 clues. I've got 1 clue is that big breakout pullback zone on the hourly time frame. There's 2 more, you could say more important clues here right now on the tick charts. Remember, we don't use time charts for entry timing. We use that hourly time frame as the bigger picture direction. I'm going to drill down to the faster time frame. Tick charts here, all the time frames, by the way, upper left-hand corner. Tick charts make entry timing a whole lot easier. And by the way, that moving average right there, the only indicator we need to make money each week, that is the 21 EMA. There's 2 really big clues right now on the tick charts. One clue is this big move going higher. Now, like I said earlier, after a big move like this, we know that nobody wants to buy high, right? I want to buy nice and low after a big move like this. So I want to see a nice deep pullback to attract in more buyers at a much lower price. The third and final clue, which is also very important, is this range right here, right? That range. What do ranges do? Ranges love to break out and pull back. I definitely have my eyes on that breakout pullback zone, and you'll see similar levels to these in the Nasdaq chart here in just a moment. How about that range right there? Now again, what do ranges do? They love to break out pullback, but they also love to rotate, right? The amount above, the amount below. Ranges love to rotate using symmetry, using triangles. So 3 important clues. We are bullish overall, again, bullish overall on the S&P hourly time frame. I'm not ready yet to call this a bear market, but the sellers are going to put up a fight around the underbelly of that range before make that run back up into that range up overhead. That's a big clue right now. That tells me to expect this thing to get knocked down pretty well. I mentioned earlier, Whenever I see situations like this, big move up today, there's always two types of entry tactics I look for the following day. They're both very simple, but I will admit the second entry tactic is a bit more complicated. Not that bad, but I'll tell you though, if we hit it right, it can double our profits tomorrow morning. So I want to cover those two entry tactics right now. The first one is the most common. The first one is definitely the easiest one, and that is a two-legged pullback. Now, when I say two-legged pullback, think about a measured move that goes a bit too far, a bit more than an AB equals CD pullback. I would love to pull back all the way to that breakout pullback zone. I'm not so sure about that. What I do know though is if I can see a two-legged pullback, when that two-legged pullback starts to accelerate running lower, it's going to feel like a reversal. And once this thing feels very bearish, I'm looking for a bear trap down there. I'm going to trap these bears in once, twice, and use their stops to fuel that move back up where? Back up to retest that high. Whenever I see a big move like this, the first thing comes to mind is a two-legged pullback, and right when it feels very bearish, that is exactly when I look for that bear trap and a run right back up to retest the high. Now remember, we know where the market wants to go, so now if I can start seeing some separation off that moving average, that higher high in price, now I can take a good winning trade, double it now with an add-on. In our trade room, in our video classes, we call this a bear trap and an add-on. Again, a two-legged pullback, bear trap, and add to our winner, going back up to retest the high. Now, here's a question though. What if we don't get that bear trap down there? I mean, it wouldn't surprise me at all if I saw a relatively sharp two-legged pullback right into our buy zone down here, that breakout pullback zone, and there could be so many buyers down there, it just whoop and runs right back up again. What if we don't get a bear trap down there? I got a plan for that. When it V bottoms and bounces hard off that low, I don't want to buy high. I want to buy low. And to do that, my focus becomes buying below a prior swing. Mark off those highs, bring it down around that low, and this is where the money is made. Guys, there aren't that many guarantees in trading, but this is definitely almost a guaranteed winner in this environment. Big move up, deep two-legged pullback. Again, sometimes we don't get that bear trap down there. It pops up, we start grinding going higher, and I find two things. One, where are those prior swings? I want to buy underneath a prior swing. And two, where is my new channel? Combine a move below a prior swing off the low of that channel, and that is a gorgeous bear trap entry. We call these V bottom entries in our trade room. One more variation of this too. We oftentimes see a strong two-legged pullback. We oftentimes get a bear trap down here. But sometimes though, the strength of that move going lower is so strong that sellers begin to come in, hold the underbelly of that move, and make another run going lower. Now, we talked about this a lot at the end of the week last week. Remember the money zone, right? The money zone is underneath that low. And remember, breakout leg, measuring leg, A, B, C, D. That's my money zone right in there, okay? So if you know that, if we get that bear trap off this low, but we don't get that rip running higher, if it rolls over here now and makes another run going lower, this is not a reversal. This is another bite at the bear trap apple. Trap those bears in, bears once, bears twice. We call these double bottom retest trades. If you're with us in our trade room, you know how much we love these retest trades. It's a bear trap off that low. It's an add-on as it separates off that moving average. A lot of examples of this trade in our free video course. In fact, let's pause for a second because we've covered a lot so far. And I know that most folks watching right now, you guys know these patterns already. You're making money with these already. But if you're watching this for the first time right now, this might be a brand new strategy, a brand new language I'm speaking here tonight Don't you worry though, because I teach this entire system in my free trading course. In fact, I have a ton of examples of bear traps, add-ons, retest trades like these, finding that money zone with that measured move down there. Guys, bottom line, the markets are way too good right now not to be making consistent profit. So I'll put a link up top here for you. Upper right hand corner, hit that link that popped up right there and take that free trading course, because the strategy I teach in that video course will teach you a stupidly simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. You'll laugh when you see how simple that technique is. More importantly though, let's face it, we make our money by timing good entries. So I want to teach you all my 4 favorite entry setups so you can time better entries, get your confidence back in your trading once again. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, what are you waiting for right now? Hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'm going to put all the important links you'll need to learn the strategy. Come join us in our trade room each morning. I'll put everything you need down below this video, the description of the YouTube video. Start first though, definitely start first on the free video course. That will teach you the roadmap we use. Most people start making money all on their own, all from that free video course. So start there first. Oh, and don't forget too, if you're on Twitter or the X platform they call it these days, I post a ton of videos and charts and mindset stuff on Twitter or X during the day. If you're on the next platform, give me a follow. Again, all the details you'll need to learn the strategy, get your confidence back in your trading, time better entries, hopefully make a lot more money because of it. I'll put everything you need in the description of this YouTube video. All right, where did we leave off here right now? Oh yes, I talked about I have 2 types of entry tactics I look for the day after a big move up like we're seeing right now. One of those 2 entry tactics is a 2-legged pullback. Again, I don't have a crystal ball. I don't know how big that first leg will be, but that is the overall game plan. Get that 2-legged pullback, and right when it feels like the thing's turning bearish, I want to bear trap and right back up and retest the high. And we talked about the V bottom. We talked about the money zone, right? And that retest trail. Sometimes it goes 1 leg, 2 leg down. Those measured move pullbacks like that are oftentimes our biggest winners. And I have a ton of examples of those inside that free course I mentioned here a few moments ago. Let's talk about one more variation of this. What if we only get a single leg pullback? So what do we do with a 1-legged pullback? Well, here's the deal. If I see a 1-legged pullback, I know now that sellers are going to be trying to produce that second leg. Guys, nothing's ever guaranteed, but usually after a big move like this, it's a 2-legged pullback. If all I see is a 1-legged pullback, I have to think now, okay, the next leg may be coming here. And I like the idea of a 2-legged pullback, but I may not get it if the first leg is a really big first leg. So if you're a student of mine, you know that anytime we see a 1-legged pullback or a shallow pullback overall, there's always one type of entry tactic we use. It's called a technical bear trap. It's bears once, it's bears twice. Now remember, on a shallow 2-legged pullback, I don't want to buy it above a high. All right, that's a big no-no. You probably have learned that lesson already. We talk about this a lot in our morning trade room. If I have a 1-legged pullback after a big move like this, right? That's the context, a big move up, a 1-legged pullback, I've got to get in underneath a prior swing. So again, I want a 2-legged pullback, but if all I get is a 1-legged pullback, I will look for bears once, bears twice, get in underneath a prior swing. We call these technical bear traps in that free video course I mentioned earlier. Now on this one, on a shallow pullback, I'm not going to have the chance to add to my winner, right? If I see a really deep pullback, 1 leg, 2 leg, see now I got a lot of open space now. Now I can bear trap down here to try. See, now my risk reward ratio is beautiful on a two-legged pullback, right? So I can be a lot more aggressive on that entry on a two-legged pullback. Also, because we're so low now as it rolls higher, I can now go out and again, shallow pullback, higher high in price. Remember, separation off the moving average, like over here, right? When it pulls back like that, it pulls back. It doesn't pull back all the way to the moving average. That is that separation I'm trying to illustrate on this chart right now. Separation off the moving average, higher high in price. I want to get in right below that low, add to my winner before we go back up and retest the high. That's our two-legged pullback, bear trap add-on. If all I see is a shallow pullback though, I don't have that luxury of a good risk reward ratio. I got to buy as low as I possibly can. This will make a lot more sense for you once you go through that free video course. We see a lot of those each week in our trade rooms. That's our shallow pullback, our one-legged pullback, and a slight variation on the entry tactic. Okay, now let's talk about the second scenario. What if we go, well, let's talk about this now in the Nasdaq. Nasdaq's getting lonely over here right now. S&P and the Nasdaq are quite similar here. You can see, well, look at the Nasdaq chart right now. I see same thing. We had that big run up in July, this monster run up in July into what was basically a trading range to finish off the week last week. Ranges love to rotate up, down, and again, now the buyers are trying to rotate all the way back up into that range once again. But again, we know this about ranges. Ranges love, when they get these strong breakouts like this, they love to break out pullback. And again, I'm definitely not ready to call this a bear market yet, but I would be a bit surprised if these sellers didn't at least try, right, to knock this thing potentially all the way back down to retest that low. So one very big clue right now is yes, I'm overall bullish still. There's simply a big pullback at this point in a big overall bullish trend right now, but I do expect we to get a bit of a knockback there, right, off that breakout pullback zone. And that's why that two-legged pullback is so attractive to me, like I mentioned earlier on the S&P. Now, I want to dive into the Nasdaq tick charts. Before I do that though, real quick, if you're enjoying this video right now, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my video here tonight. So as always, thank you so much for the likes, subscribes, all the ongoing support in the comment section below. Now, let's dive in and talk about our tick charts right now. And again, tick chart, remember, tick charts are based on volume. One tick is one transaction. It makes entry timing a whole lot easier. And again, like on the S&P, all the time frames there, upper left-hand corner, same 21 EMA. What do you see right now on this NASDAQ? Well, there's that big move higher. And like every other big move higher, I want to see a deep pullback to attract in more buyers. What else do we see right now? There's a range back there. What do we know about ranges? Ranges love to break out and pull back. What else do you see? I see a range right there. What do ranges do? They love to rotate the amount above, the amount below, right? That range will want to rotate using symmetry, using triangles. Again, I know a lot of you guys know this stuff already because you're with us in the trade room each morning. And remember, after a big move up like this, a second scenario now is we may see another range forming up here overhead. So the same game plan applies to the NASDAQ as it was for the S&P. I would love to get a deep two-legged pullback, trap the bears in, go right back up to retest the high. I would not complain at all if it went right into that pendulum swing area, breakout pullbacks area. That would be fantastic for the bear trap entries we talked about earlier. But let's face it though, it's the month of August right now. The month of August, we may keep grinding up here right now. We may go sideways into a new trading range. This is the second scenario we look for after a big move going higher. Now remind me, what do ranges do? They love to rotate up, down, up, down, back and forth with symmetry. And you could also probably speculate too that if we saw, for example, a range and we break out of that range, a two-legged pullback, a breakout pullback would be fantastic above the high of a bullish range right now. So let's talk about this for tomorrow, because there's two basic things I want you ready for tomorrow morning. First things first, if we go sideways in a range, ranges act like magnets. So once we know where that new range is, that range becomes our magnet. Knowing that, at that point, all I want to do is try to get underneath prior swings. Very important right now. Get underneath prior swings. Basically, get down to a support level underneath that trading range. That range is a magnet. It's going to want to rotate the amount below, the amount above. I'm going to use the exact same entry technique, that bear trap, into add-on. I'm not going to pick a bottom on this, all right? Because I don't know how far it will go. It's summertime trading. Summertime markets make these big moves. Go back and see what happened last Friday. Big moves during low volume summertime season is very, very common. So it might be here, might be here. I don't know how far that pullback will be. What I do know though is that once I see that breakout going lower and I wait for that price to pull back to that 21 EMA, this is a horrible spot to be selling. I would never want to sell that pullback. Remember, that range above us is a magnet. We're an overall bull market on the higher time frame. This is the worst place to be a seller, and therefore the best place for, you guessed it, a bear trap. Wait for those bears to commit. Now, why? Why let them commit? Because I want to use their stops. If you're caught short and you get stopped out of your short trade, what happens? You buy your way out of that short trade, right? That's why stop runs, that's why short squeezes exist, right? Bears get stopped out, it squeezes their stops, they have no choice but to buy their way out. And you know how this story goes, right? The bear trap triggers, stops get run, we run higher here, and now rotation begins. This is why I said earlier, this scenario, this range game plan could literally double our profits tomorrow, because now we're not simply trying to go back and take out that high now, right? We're not trying to go back to the high anymore. Now we're trying to rotate. This is why ranges are our favorite type of days. We call them day types, range day types in our trade room. This is why I said earlier, this second scenario, this second technique could be a much big winner. It's a bit more complicated because, first of all, you're going to find that trading range, then wait for the breakout. The hardest part about these is that this breakout is going to feel like a reversal. That entry right there, that buy, that bear trap long is going to feel very uncomfortable. I'm warning you right now. But like I said last week repeatedly, the most uncomfortable trades are the ones that make us the most amount of money. Get comfortable being uncomfortable. That is a great example. Again, bear trap, one try, two try, squeeze those stops and run higher. Now, if there's one scenario where you must leave a runner and add to your winners, it's this scenario right now. Higher high in price, get in underneath that low, get that separation off that moving average, and you're in with your add-on. Leave that runner, please, please, range markets, leave that runner all the way to that pendulum swing on the opposite side. That could be a huge, huge profit target for us here tomorrow morning in our trade room. And remember, the same variations I mentioned earlier, right? The same variations. If we go sideways and we see that very strong run down, if it V bottoms off that low, remember, we may not get the bear trap. We may not get the bear trap down there and back up again. It may pop up and begin to grind going higher. What's the game plan? The game plan's twofold, right? One, find those prior swings, and two, find one of those swings that lines up right below the low of that channel. One of my favorite trades, a V bottom bounce off that low. In this case, we're not going to get the bear trap down there. We'll start adding to we'll start adding in, right, getting our position off the low of that channel. And remember this also too, right? Sometimes we don't get the pullback here. Sometimes it makes another big run going lower. Now remember, what's the game plan on this? Remember, it's the money zone, right? Remember the money zone. It's the breakout leg, measuring leg. It's that measured move right there, right? It's that measured move along with a retest of that low. We may not get that signal, right? We may not get that entry off of that low. It may simply crush and run back down again. But again, we know that. Once I go back to retest that low, once I complete that measured move going lower, is this a good place to sell? No, it's not. It's the last place you want to sell, but it will make a lot of rookies want to sell short down there. That's how I learned this technique many years ago. We run down, we bear trap those bears in. We're not in the business of picking tops and bottoms. Let those bears come in, squeeze those stops, and we're running where? Back up into that range, up overhead. Retest trade, right? One of our favorite trades in our trade room. And one final thing here on this range. Like I said earlier, this range right now, we may wind up rotating all the way back down again off that high. If we see a range up here tomorrow morning, that range becomes our new magnet. We know how to trade this with a bear trap under that low. That's the easy one. The harder one is when it goes higher first and then comes back down again. I'm going to warn you right now, right? This will feel like the world is coming to an end. It's August. It's the middle of the summertime season. It will be very violent. In most cases, it will be off of that high. But again, you know better now. You know it's a rotation. It's not a reversal, right? It's a rotation off the high, off that low. That tells you now this is a spot for the bear trap. Wait for that pullback off that moving average. Bears try once. Bears try twice. Remember, always a higher high. I want those bears trapped in so I can squeeze those stops and run that rotation back up again. So beware or be aware of that dynamic, right? Be aware of that new range possibly here. Again, I don't know where the range will be right now, but that's one thing I'm looking for tomorrow. And be aware of that pop up. Don't get trapped buying high up there. Look for the amount above, the amount below, and of course that bear trap off that low. Love those pendulum swing trades that we talk about in our trade room. All right, guys, that's our game plan for tomorrow and some variations in case we don't get those perfect entries tomorrow morning, but that's our game plan. Now, speaking of tomorrow, the place to be is in our trade room. Every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to come out and learn and trade along every morning at the opening bell, 8 o'clock Eastern time. As always, I'll put all the important links you need to learn the strategy in the description of the YouTube video. Start first with that free video course. You're going to love all the trade examples I include in that short video series. Then promise me, once you cover the basics, once you learn the basics in the free classes, come join us in the morning trade room and we'll do it together. In the meantime, guys, hope you learned a bunch this afternoon. Hope you earn a bunch of this information tomorrow morning. And be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.